Welcome and thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal channel, day trading for an ROI payout. It's just my trade journal. It's all about rule-based price action trading. My daily affirmation: I see it and understand, rigid discipline and rules, flexible in outcome expectations, independent thinker, impeccable risk manager, precision-based trader, and responsible business manager. So it's all about price action, order flow levels, and I'm framing my new week trade plan for September 7, 2023. And it's all about how to begin third week of September. So number one, seasonality awareness. We only get one September a year, and that's a big deal on the seasonality of where and how the market acts. Number two, the big catalyst is going to be Wednesday, September 20th, 2 p.m., and that's the FOMC. And the Fed has still been hawkish on rates, so it's all about what they say, how they say it, and what the market reacts. So if I don't do any trades until post FOMC catalyst, that's fine, because this is a really big deal, and you put the seasonality awareness with the FOMC, and that could be a double play easily. Number three, higher time frame draws on liquidity plus the imbalances, whereas price respecting and disrespecting these two things, plus liquidity purges. And the most important thing on number three is trading my model. And the fourth and final is where is the baseline 5. So I need to have an awareness of that. So we'll go on the next slide there in a second and see how we left last week on the baseline 5. So how to leave the third week of September, how I want to quit, is obviously with ROI, return on investments. Let's go to the next slide and talk about the baseline 5 on how we left last week. Here we are, baseline 5, how we ended Friday last week. 2-year Treasury inverted over the 10-year since July 2022, and we ended at 5.037. On the 10-year on the right side, 4.336%. So after the Fed does its thing on Wednesday, it's going to be real important to see the comparison on this inverted yield curve. On the lower left, crude oil 91.20. It looks like it wants 100. That is the highest price of the year, how we left Friday, 91.20. And then the VIX, the volatility index, still low, 13.79, but that was up 7.5% on Friday from Thursday. So again, at 13.79, we'll see how it ends the week. And the dollar holler, the U.S. dollar index, 105.33. Again, this was the big truth serum of what really mattered to the equity indices. And somebody was lying. If both were going up, the stock indices and the dollar, eventually the dollar's the one that stayed up. And Friday, you saw the equity indices really slump on a sell program that lasted all day. So again, 105.33 on the dollar. That wraps the situational awareness on the baseline 5. Stay tuned for the next video where I go over how we're doing on Monday before the RTH open on the New York AM. Stay tuned. Take care. Aloha. Bye.